Hey, welcome everybody to the 40 Finance channel. Today I'm doing a live stream just talking a little bit about all these recession rumors that we're seeing across the headlines. Meanwhile, in the background, we're actually seeing most of at least the large cap stocks bouncing back from what could be their year-to-date lows, depending on if they get lower than that. But so real conflicting news out there in regards to a recession. And I'll be the first to admit it's hard to predict. It's hard to foresee a recession. And then once it starts, it really kind of spanks you when it's in its clutches. So we're going to look at a couple things that I don't think get talked about very much in terms of using the word recession. And then we'll just kind of open it up and talk about some stuff. It's going to be a short live stream today. I got another appointment at 3. Lions here with Alibaba and Kevin Hawthorne. Good to see you. Derek Ridlin. I'm finally live on a green day, which is totally fair. I do tend to get more excited on the red days because they're kind of like buying opportunities. But here we are on a green day. And I'm just going to go through like the actual factors of a recession. Then we can talk about it. You guys tell me what you think. I'm staying in the lane of like, man, stocks they're not necessarily on mega clearance sale, but there's some good buys out there. And I feel really good about buying certain stocks right now. Not necessarily the no earnings stocks, but there's a lot of deals to be had, particularly if you're in the long-term game, which is me. And, if you are in the long-term game, I would say that this is definitely a time to pepper in some buys. You may not hit the bottom. You may not time it perfectly. But if you're holding long-term with really good companies, doesn't even really matter, right? So let's jump in. I'll show you what I got today. And then we'll talk about it a little bit. So this is, I'll see if I can, this is just a Google, I just typed in recession 2022, and here's all your headlines. You'll notice like the timestamps on these, like it's every day something else comes out about recession. And obviously the fear factor with this word probably sells a lot of subscriptions and clicks, but hopefully, you don't buy into every single one of these, but everybody is entitled to their own opinion. I just think it's fascinating how big of a topic it is. It's like people are rooting for it at the end of the day. But what I wanted to show you mainly here, and this is a Forbes article, not that Forbes is so much, the greatest source of information of all time, but they break up these recession definitions pretty well. And they actually give a couple different angles to it, which I thought was good. So they start with the sort of scientific 1974. Julius Shishkin came up, few rules of thumb to define a recession. The most popular was 2 consecutive quarters of declining GDP. And a healthy economy expands over time, so 2 quarters in a row of contraction suggests there are underlying problems. This definition of recession became a standard over the years. Now, we also have this NBER, which is generally recognized as the authority that defines the starting and ending dates of U.S. recessions. So NBER is going to tell us, apparently, when the recession has started and ended. Their definition, of what constitutes a recession, is a little broader. And they say, namely, a significant decline in economic activity spread across the economy, lasting more than a few months, normally visible in real GDP, but not, that's not a requirement. But it's visible in GDP, real income, employment, industrial production, and wholesale retail sales. The NBER's definition is more flexible than Shishkin's for determining what is a recession. For example, the coronavirus could potentially create a W-shaped recession, where the economy falls one quarter, starts to grow, then drops. This would not be a recession by Shishkin's rules, but could be under the NBER. So just hitting this real quick, going up here to the NBER. So first of all, real GDP. Now, a real GDP comes into play with inflation. Obviously, a lot of people are watching that. But if I flip over to Fred here, and we break out, this is 2019, Q1, and we're through Q4 of 2021, and there's obviously no contraction at all in GDP. I mean, outside of, the obvious, which was Corona. So I don't see any contraction in GDP. I haven't heard anything to suggest that United States GDP is on track to be worse this quarter. So it's not going to be a contraction of GDP. Now, people will argue the real GDP, if you pivoted off of inflation, then you could have a problem. I get that. We'll see how long inflation lasts, though. But, generally speaking, I don't see contraction in gross domestic product. So you just leave that there, and then I'll get your guys' thoughts. The second thing was real income. And I don't have a data point here for this. Let's see if income level, see if we can find a quick headline. I'm guessing that we're up quite a bit, because we know, and I say that, I wish I would have bookmarked a article here, but I don't see it, so we're not going to waste the time. We know that wages are up, right? We know that wages are up. Are they up enough? That's up for debate. Now, employment, we know that unemployment is basically at all-time lows. We know that everybody who runs a business is looking for employees, so that's certainly not a factor, right? So I'm going to say, income and employment arguably off the table. The inflation would impact income. Industrial production. I don't see anybody hurting for orders on an industrial production side, right? If anything, we're short of several important factors. And then finally, wholesale retail sales. And this is where I think you start to see in the stock market, in terms of revenue and earnings, while the growth isn't as robust as we've seen, coming off the pandemic, which was, effectively at zero, I still see a ton of people that are doing well. And as a matter of fact, if we go to SeekingAlpha real quick, this is just USA large and mega caps, and we look at EPS revisions. So instead, this is their little quant formula. So I'm just looking for A's and B's on EPS revisions. We have 338 names. This large and mega cap sort that I did includes 592 names. So on the positive front, EPS revisions for next quarter, 338 out of 592 are at least a B, which we'll just assume is a good grade for their EPS revision. So let's try to pick out a name here. That's Allegheny. Oh, I'm trying to get a name. How about Ford? Is Ford here? All right, so this is what they mean by a B. So they're going to have, on this one, for this quarter, they have 1 up and 5 down, so that doesn't correlate very well with the grade that they gave them. How about AMD? We know AMD's demand is way up. And so this is the more likely what I would have expected out of Ford. 6 EPS revisions up over the last 3 months and 0 down. And now that I see it's the last 3 months, that might be different than the way this letter grade is handed out, which could be shorter term. Perhaps it says it might be last 30 days now that I think about it. Okay, so bottom line for me, we go across decline in economic activity Here's one more thing I had just for fun. Travel bookings. These are just headlines. I'm not going to dig into the data. Freaking Alaska Airlines. I mean, if they're seeing strong bookings and returning business travel, then we're all in good shape. U.S. booking sites, strong demand. Haven't booked an airline ticket yet. Bookings are bonkers, pushing prices up. Obviously, we know that plane ticket sales are probably going to be more expensive. U.S. travel booking sites see strong summer demand, blah, blah, blah. The point here is, at least travel-wise, which is a big part of economic activity, when you think of all the small towns and tourist destinations that probably have been sucked dry in terms of revenue, I would say that at least the headlines on the travel front look very promising. Then in this Forbes article, they talk about the GDP, which we looked at. Now that's not real GDP that we saw at Fred, so there could be an inflation impact to that, and I'm well aware. I'm not trying to disguise that. Same goes for real income. I'm just saying wages are going up. GDP is going up. Will inflation offset those things? TBD, right? TBD. And then as far as employment, I see zero employment problems. Industrial production, I see zero. In fact, there's not enough truckers to even get things from point A to point B. And then wholesale retail sales, I mean, you just eyeball some of the stock EPS revisions, and I don't see it there. So that doesn't mean things can't change. And I'm not trying to say go borrow money and put it in the stock market. I'm just saying that every time I see a recession headline, I take it with a grain of salt. And what's interesting to me is how many of those headlines have been out there. And it's obviously a super popular YouTube video these days. Anytime you're talking about death and destruction, people are piling on. All right, so I'll stop there and get your guys' opinions. We've got Lion jobless claims hit their lowest point since 1969, which is crazy. Green Bullish 2022. Lion said, I told you, buy Berkshire. Look at it now. Yes. So I did that recent video on Berkshire where I really wanted it to be a hedge on my QQQ bet, but then the Apple holding just kind of held it out a little bit. But it's a fantastic purchase right now, and it looks like if you throw in their stock buybacks, if you throw in the fact that he finally bought something with all his cash, I do love the direction that Berkshire's in. And I think it was Derek who left a comment on that video and said, has anyone ever lost money buying Berkshire? And the answer is no. It's so true. It's so true. And I'm for one, I think all of us who are long-term investors, you got to root for Warren Buffett, right? People were taking him to the woodshed. I got to say that I refuse to say something bad about Warren Buffett because as much as people are like, whoa, ARK invests and he missed all this. And then the funny part was, if we look back at the one thing people nailed him the most for was perhaps selling airlines at a low point, but then airlines and travel have really struggled to bounce back. Right? And we're still, hopefully this summer, we'll see more business, travel and whatnot. But now gas prices for airlines could cut into their profits too. So maybe even as airline sellout that was generally labeled as a dumb move by armchair quarterbacks doesn't even look that dumb anymore. So shout out to Berkshire investors who hung in there and believed in a guy who's well worth believing in, frankly, if you go by a track record. And I got to say, I don't invest in insurance and banks. It's just not my thing. But I think that if I ever do get to that place, and maybe I will add some Berkshire at some point, it's nice to just let the Buffetts figure it out. Which if they like Wells Fargo and Bank of America, super. Those probably are not the ones that I would have picked, just like kicking through. I would have figured like, you know, like the Ally banks, not just because I have some banking with them, just because they have a more modern approach without a bunch of offices. But, you know, I'm not going against Buffett. His track record speaks for itself. All right. We got Allie. Good afternoon. I finally could take a look at my portfolio after 3 months. Uh-oh, Allie. This isn't a good time to look at your portfolio. Hopefully it's doing all right. Lion says, Facebook, PayPal, finally up. Yeah, it's looking like it's going to be a long crawl for PayPal. I was looking at it today. I'll have an update tomorrow. But I still say I'm not coming off of the 150 line would be about fair value for them. I'm sticking with 150. That would still put me under because I'm at like 169 or something. But I do, I'm still in. I'm still in. And since you guys are here, I'll tell you because I'm going to do the video here in a week or two. You know, the real bull case long for PayPal is what Venmo is starting to become as far as a digital wallet. And I'll go through, you know, some of the, it's so early. It's so early in that game, but I like what I see out of Venmo becoming part of the digital wallet and potentially excelling even with the competition. I will say that Venmo versus Cash App, I'm less worried now from a transactional standpoint. I'm less worried about Cash App than I've ever been, and it's not because Cash App won't be profitable, it's just because I think Venmo will actually hold a stronger weight in terms of the shoppers that use it. So, you know, we'll see. But I'm sticking my bullish case with PayPal. Also yesterday, if you didn't notice, I made a stunning move for me as someone who normally doesn't buy Chinese internets or Chinese standalone stocks. I did buy 50 shares of KWEB. On the heels that China is going to, you know, try to eliminate these delisting fears. I also was very intrigued. I'll see if I can pull it up here. What I saw out at KWEB in the fact that they are switching over to the original shares for a lot of this stuff. So instead of holding the ADRs, let me see if I can get this going here. So this is it right here. So instead of holding the ADRs, they are going to the Hong Kong shares for the Alibabas and whatnot. And you can see how this is broken down over the past year. I just did this video, so I won't bore you. And last year at this time, they're at 75% ADR shares. Now they're at 66% Hong Kong shares. You also, they changed the graph on this. But anyway, you can see the percentage of net assets for like the ticker symbol BABA is now down to 0.01, where the Hong Kong listing is actually the 10%. And they got out completely of the ADRs that were listed as potential delistings for 2024. So they got out of all those. So I'm taking a chance. I'm going in with Derek and the gang who have bought BABA at the lows. Honestly, it's just at a point, and even though it's bounced a little bit, I was kind of glad to see it bounce, and I wanted it to hold that bounce for more than a day. You know, there's still a lot of value there, but they got to get these things corrected. At the end of the day, I'm going to take a smallish bet, and I'm going to get about 100 shares of KWEB. It's riding about $30. It's actually down today because they're pulling back. The United States is pulling back. Let me see if I can get you an article here. That like, hey, China made these announcements, but it's not exactly foolproof here yet. Let's see. Tencent. This is March 24. Where did I read that at? 1 second. Maybe it's this one. And they don't have it on here. So anyway, I'll just tell you that here it is. Exchange traded funds lost ground at start of Thursday. As U.S. audit watchdog stated that speculation on a deal that would prevent hundreds of Chinese companies from being removed from the U.S. exchanges is premature. And I said that in my video that, hey, like the storm isn't over yet, but hopefully they're making some progress. And that was a big one for me because nobody who does any sort of value investing, particularly from a growth angle, can look at Alibaba and say that it's anything less than undervalued, right? And Tencent, while their growth they just announced is slowing somewhat, it's still too big and it's still growing. They say single-digit growth rate this year. That's too big to ignore. JD.com, it's too big to ignore. So I decided to put a small stake in the race. We'll see what happens. I've owned KWEB before, but right around the end of 2018, when Trump and China were not getting along very well, and there was some talk about that. That's when I got out, and I left Chinese stocks behind at the exact same time. And now I'm going to take a chance and see how the bounce goes. At $3,000, it's not a mighty investment, but if things do turn around and I've got time on my hands, and I don't, realistically, I could see that one being an easy 25% gainer. If the government follows through in what they said. All right. Derek's here. I'm not buying that this is over. I agree. I'm selling out of stuff that I'm green on and overweight via averaging down, and I'll be ready. That's a good call. And I think as bullish as I am for the rest of the year, particularly the back half of the year. So I think this summer consumerism explodes. That's, I've shown you some of these recession things. But to Derek's point, it wouldn't surprise me if we have little, dips along the way. Certainly wouldn't surprise me. It definitely seems like we're headline driven in a massive, massive way. And I feel good, though, that the underlying earnings and revenues of stocks still look good. The projections are still good. Now, they're projections. So, projections change. That's the way it goes. But I think that when you think about the big dogs that hold the market, whether you're going Apple through Netflix and NVIDIA, I say that things are looking good for now. We'll see if people rein in their spending. I don't know. Gas is a concern. But I think the gas trade, if you weren't in it in January, maybe even December, I think you've missed out. And I think going gas now, maybe it's got another 10%. I don't know. I just feel like in the United States, the government steps in at some point with either a subsidy or the U.S. National Reserve barrels start to come on the market. We'll see how it goes, but I still feel okay about it. I also feel good. There's been a different game that you guys might want to think about. There's been a different game in COVID times when you think about stimulus, and that is the fact, and unemployment boosts, right? There was a new shopper in America that did not exist prior to COVID, and that is the folks that were blessed with these, stimulus checks, and they all of a sudden had more money than they've ever had, and they went out and spent it, and we saw how that impacted the economy, and most people would argue that there was, maybe one stimulus too many, and so those people who benefited the most from it, I could see their shopping patterns changing significantly, but I haven't run Me personally, I haven't talked to a lot of people who have two wage earners in their home, who, at my age, they have families, they buy cars and houses and whatever, not rich and famous, just regular stuff. And I haven't seen anybody saying, I'm not going to buy whatever. I'm surprised how many people are buying cars. I feel like cars are so overpriced, and I run into somebody new every day who's like, yeah, I just ordered my new Bronco, right? And you can't even negotiate the price, and we just bought it anyway because we wanted it. People buying mountain bikes and stuff for summer at insane prices, with seemingly no care about the price of things going up. So that's just what I see in my little four-walled world. It wouldn't surprise me if the lower tier of the economic shopper does have to face choices, but there's another choice to that. We'll see if it ever materializes, and that is that person or that class could effectively raise their income levels simply by getting another job. And I don't know a lot about that world, except to say if you're making $13 an hour at some restaurant or wherever it is you're working, I know that at least around here on the billboards that Amazon's paying $20 an hour. So do you consider that move? And then all of a sudden you're making, it's not double, but it's way up there. And when you're having to punch the clock to make money, it'll be interesting to see if any of people progress in that way. Now, I would say if you're doing Uber deliveries for the big part of your income and with gas costs, that's going to be a struggle. That doesn't look like that's going to pay very well. I never thought that sounded a whole lot like a good idea from a full-time standpoint, but I know a lot of people do it in their spare time because they can just turn it on and go make some quick dollars and turn it off whenever they want. But the people who have doubled down on that game and they're Uber all day and Uber Eats, I would imagine that their income would be declining, if nothing else, due to the gas prices. But, how much of that is the economy? How much are Uber drivers the American economy? I don't know, but it doesn't seem like it's a huge percentage. Right? So that's the key. Like the media is going to pick up on little sections of the world, and they're going to say that, these are the people that are struggling and look out for the recession. Whereas in the broader picture, you're probably seeing the vast majority of folks have increased income, and just by nature of rising prices, they have increased spending. Yeah, we'll see how it works out, but that's my 2 cents. All right. Derek wouldn't buy DraftKings if it was $1. That's too bad, but I get his point. It's now down 56%, as Lion was saying. I'm still in. I think Lion, we got let's see. This is the end of March. We've got basically the rest. We won't know what the tournament totals were in terms of betting handles. They're not going to report that till at best halfway through April. Then we enter the quiet season. Now, the quiet season does include some things that we did not have last year from a comp standpoint. So you've got, first of all, you can go to the freaking tournament, to the tournament games in basketball. You also have the fact that NBA and NHL playoffs are going to be on time this year, and so that could factor in to a boost in handle. And then one thing that gets overlooked a lot that has a ton of gambling activity in it is golf, which I know sounds funny. I'm not a huge golf guy, but there's a lot of people, like when you talk about the Masters and the big tournaments that are on TV, they bet on that stuff. So the problem is you're going to hit the summer quarter, which is always the bottom line for DraftKings and any other gambling stock. It's when things tend to go down to the floor, and then we circle back in September. My 2 cents, Lion, And I said the exact same thing last year, and I'll say it every year that I hold DraftKings. Do not sell in the summer. And no matter how bad it looks, screw it, we're already down 56%. I'm down from cost basis of 33 to about 18. Absolutely zero plans of selling prior to the kickoff of football season. Just the way it goes. That's when the headlines are going to ramp. If you're going to sell, hang on to it. If you can't wait to get out, I encourage you to at least hang on through Labor Day, get that bump in the football share price, and go from there. But, you know, it's a long-term game, and it's not for everybody. All right. Lion says, also where inflation is measured as a year-over-year figure, March, April, it will stay hot, but come summer and fall, it falls down. Yes. End of year inflation will be down. The other thing, Lion, that I noticed that's off, not really getting a lot of news response right now, is we had that the CTC, child tax credit, or child care tax, I don't know what it is. But bottom line is, you know, there was a child tax credit that came out, a big number. I forget, I want to say roughly $2,500 per child, okay? And 50% of that was handed out in monthly checks between July and December. But what is not represented there is the other 50% comes out on tax refund season, which is happening right now. And that is above and beyond the normal tax refund you would get. So when you want to go down to the poorer levels or even below median, I don't know the number, but let's just pretend median is like $45,000, $50,000 for a household. I'm making that up. I don't know how true it is. Anyone with an AGI that's anywhere under 100 grand, they're getting it. They're getting the whole thing. And if they normally got a $1,000 refund, just as an example, assuming everything stays the same, they will continue to get that $1,000, plus they will have the back end 50% of their child care tax credit tacked on to that, which could be anything. If you've got 4 kids, that could be, let's see if I do my math right, that could be another $5,000. You were given $5,000 between July and December, chopped out monthly. Now you're going to get a drop, a $5,000 drop along with your refunds. So refunds could be big this year for a lot of people, particularly people with children. All right. April 5th is shareholder meeting. I don't know what you guys are talking about. MasterCard and Starbucks. Love MasterCard. I'm a Visa guy myself between the two of them, but I think American Express, MasterCard, Visa or all three of them are in position to break out of this lull that they've been in. I don't think you can go wrong probably with any of them. I prefer Visa because I think their technology, their rail system is more broadly integrated with payments as a whole, but I'm just not sure you can go wrong with any of them right now. And as soon as you hear 2 words, which we actually saw on this headline, what's the last 2 words in this headline? 3 words: returning business travel. As soon as you see these 3 words start to be discussed in more detail, you know that things are good for Amex, MasterCard, and Visa. All right. As king of frugal, I find myself making conscious financial decisions around gas. My own consumer spending has been down as a result, and he's probably not the only one. So Derek, who I know is a Cincinnati resident, hopefully you're using your Kroger discounts. That's huge. A family of mine with 3 kids, we're racking up some bills at Kroger grocery-wise, and then they give you a certain amount per whatever you spend, $100. I don't know what it is. But I'll tell you one thing, when I go to the Kroger station, it ends up being like 50, 60 cents off every single week because we buy all of our food at Kroger. I mean, that's like, I don't sort of nitpick rewards programs, but I'll say that that's the easiest one that I know of. Allie says Chinese stocks have some risks, and if you can accept it, that absolutely they have a lot of risks. And but for me, at $3,000, which I'm not even there yet, I'm 50% of the way. I'm willing to take a chance. That's $3,000 out of a portfolio that's probably right around the 90s now. We've had a little bit of bump, so I think it's an understated position that's worth a shot. Let's see what we got. I don't know about the DraftKings vote on April 5th. I did not get the letter. Now, sometime I do in Ally where I would hold DraftKings, I do the paperless, whatever. So, and you know, if you guys have a brokerage account, how many freaking notices you get of the dumbest things. So it's probably sitting in there as a notification that I never looked at. Allie says, during some research, I found some movement to India stocks, and it could be huge compared with China. So I've heard that India's economy is doing well. I have heard that just from watching CNBC. So you'll have to give us some names. I don't know a single, unlike the JDs and Alibabas and whatnot, I don't know a single India stock. Like I wouldn't even be able to say what is their Amazon. I have no idea. We're about to start doing both cars at the same time with Kroger. That's a good idea. So Derek's about to line up. So obviously you put in your rewards card and you've got your 50 cents off, and then, you know, somebody fills up, then your wife or your husband pulls in behind you and you keep going. I don't know what I'll say this. They have to let you get at least 20 gallons because my wife has a Tahoe, and that's a 25-gallon tank. And granted, it never runs down to empty, but I know I've pumped in the 23, 24-gallon range in that thing, and it's never like alerted me to shut it off or like the discount went away or something like that. So that's a funny idea to go just roll in there and do both cars. I like it. All right, guys, I got to do a short one today because I have to pick some kids up for baseball practice, but I just wanted to come in. I'm probably going to do another one of these tomorrow with more time, but I wanted to talk recession. I wanted to see what you guys were thinking because I'm not in the recession in mindset. I'm just not. I would say that if I'm scared of anything, I would say consumer discretionary, which is a huge one for me because I love that category because when it explodes, and that's all your travel, hotel, restaurants, etc. I would likely buy more as it rolls down. But even Disney World, right? I would say Lion and I, long time ago, we saw Disney at 130 something, and we were like, well, and then it got away. I think that Disney will keep getting some negative headlines, and I think Disney is a stock to watch and potentially pepper in on the lows, because that company, I would be shocked. No matter who pulls back what on spending, I would just be shocked that place wasn't filled to the brim in summer. And I know they just shut down one in China. You know, China needs to get their COVID guidelines under, they got to stop trying to just prevent anything from happening. And they just need to get going, and maybe they will. But that stuff will open up, and USA Disney is going to be crushing it this summer. I can't imagine any other way. If you have a, let's just say, 2-year-old through maybe 6 or 7 or 8, how many birthdays have you missed? You can't do birthday parties through COVID. Those people are going to go wild at Disney World. Mark my words. So Lion says Disney going woke equals going broke. Well, there's a lot of haters for sure. As a stock and as a parent, I still see it. I'm not one, there's not much in their character line that does much for me, but I see the parks as being a huge rebound. So Guys, thanks for hanging out for a little bit today. It's good to see you. I will get a longer one on the board here in the very near future, but glad everybody's doing good, and we will see you on the next one.